Morning, Steve from Advantage. Just doing the first episode in our new series of mortgage hacks. Basically, give you a bit of a background. We've looked at our sort of client base, and we're finding a lot of sort of 25 to 35-year-olds, obviously because property values are been shooting up crazily over the last couple of years, are struggling to keep up with property values and get that property they need. So first mortgage hack we're going to do this week is around deposit, and the common question is, should I use some of my deposit to pay off debts that we have? Now, you would think it would stand to reason if you pay your debts off, you can get a better mortgage, you can borrow more. And the common advice, if you go to some mortgage brokers or a bank or building society, is they will generally, as a sort of by numbers bit of advice, tell you to pay your debts off. Now, obviously, it's good to have less debt. However, there are instances where that can be counterproductive and can actually reduce the property value you can go for. So I'm just going to show you how. So just using NatWest as an example, just because there are loads of lenders where this happens, but just NatWest as an example. Let's say we had a couple that were looking to buy a property at £200,000 with a 10% deposit. So they'd need a 90% mortgage, which is 180,000. Let's say they're employed, both on 21,200 each. You see, I've kind of already run the numbers on this. This one I made earlier, and they've got joint debts. Let's say, I don't know, car each, which is 350 quid a month. Now, if we run the affordability, they can borrow 180,000 that they need there. However, if the debts get paid off, it's still 180,000. So you can see there, let's say, I don't know, those debts were £7,000 to clear. What they've then done is actually robbed their deposit of £7,000, and it's not changed the borrowing at all. So really what they've done is they've reduced their property value they can go for by £7,000, and potentially changed the loan to value because the percentage deposit will have gone down as well. So yeah, that's something which crops up quite a lot. And I'd say before you go anywhere near paying off any debts you've got ahead of, looking to get your ducks in a row for buying a house, please don't just speak to a bank or a building society. Speak to a mortgage broker, get them to run the numbers on what you can borrow with all lenders, and then get them to run another search with those debts paying off and see if it actually makes a difference. Because in a lot of circumstances, it really doesn't, because lenders have got this new tolerance for debt, basically. So any questions, let us know. Next week, my business partner, Dan, will be giving you a run through on the new sort of private schemes that are going to be replacing Help to Buy in the coming sort of months and years. And yeah, any questions, just pop us a comment below. Cheers, bye.